The Wall Street ends the week at record high levels. However, range-bound sessions saw the Nifty and the Sensex post marginal gains. This week was led higher by banks. Hello and welcome to Editors Roundtable. Over the next 30 minutes, we take stock of the week gone by, decode Tata Chemicals rally and the road to Dalal Street, and put also the spotlight on women leaders, especially in the consumer space. I'm Mangalam Malu, with me Nimesh and Prashant, and along with us we also have the guest. We have Pankaj Tibrewal, of course, who is the founder and CEO at Ikigai Asset Manager. Were you inspired by the book, Pankaj?
Yes, I've read it 8 to 10 times.
Wow. What does it mean?
It means purpose of life.
Purpose of life.
I think gradually we'll have to learn talking Japanese with you, I guess.
No, India is fine.
No, before we started the show,
record highs as well.
Before we started the show, I was just mentioning that actually, Japanese culture, I think it's, especially with the younger generation, is a big hit.
Yeah.
Yes. Especially the movies,
Absolutely.
anime as an art form,
Yes.
and so much more.
And the Japanese have words for things that you and I can't even imagine. And we've always felt, case in point, something like the word that is beauty in broken. I think it's called kinso kurai or something. He'll obviously correct me because of his proficiency in Japanese. It's things which are broken, they actually put it with gold and make it even a lot more beautiful because they say that broken is equally beautiful. So very interesting, the Japanese philosophy.
Thanks,
but
Mangala.
enough about Japan. Indian markets, they are doing extremely well.
Well, absolutely, Bangla. Again, markets this week were at record highs, though in a narrow range this week. And of course, because of the truncated week as well, we're going to celebrate a long weekend. But again, looks like there was a return of the bank stocks. So the bank Nifty actually outperformed this week. Maybe to some extent, it was also because of the RBI regulation on the NBFCs. So looks like the focus shifted from NBFCs to the private and PSU banks this week. So that was a big theme for this week. The other big theme was the big outperformance of the Tata Group stocks. What a big move in the entire Tata Group stocks, like Tata Chemicals. In 1 week has rallied almost 40%. Tata Investment is up another 22%. And the likes of Tata Power is up 15% this week. So big moves in the Tata Group stocks. The other big theme was the city gas companies. A shocker came from the oil minister's statements where they indicated that there could be further regulations in terms of pricing. We saw both the companies cutting some price as well and big stock reactions as well on these two names. So that was again the highlight. The other big corporate highlight was the interview from Rajiv Bajaj of Bajaj Auto. The stock was a big outperformer this week, and Rajiv Bajaj just casually said that in my eyes the fair value for Bajaj Auto is 12,000 rupees. So that again stood out for me in terms of the big stock to watch. So again, as I said, a good week for the markets, a bit of consolidation, but looks like the momentum is back.
The momentum is back. Pankaj, the one thing that stood out this time around was the first few days of the week, there was serious underperformance from the broader markets. We did see, more stocks declining than the number of stocks that advanced. Thursday set aside. In this month itself, the small cap index is actually negative as against, the gains that we've seen in a couple of these large cap indices. You've been warning about the weakness in the mid and the small cap space, or rather the froth in that space. What are your thoughts now?
Mangalam, very right observation, and I'll give you one more data point. So, obviously, in the last 60 days, if you look at the broader market has underperformed the heavyweights, the Nifty. Another data point to notice is that within the mid and small cap indices, the median return is worse than the index returns. So, for example, if the small cap index is negative by 1%, the median stock return is negative by 2.5%. And similarly in mid cap, that means few of the heavyweights in both the indices are just holding on. But the breadth of the market is worsening. And we could see that. The index is down almost about 5 to 6% from the all-time highs, whereas Nifty is now at an all-time high. So clearly, I think this year could be the year of heavyweights. Okay. And one data more which I looked upon was that it's been 3 years since the equal weighted Nifty has outperformed Nifty.
Oh, wow.
Right? Probably, I think we are reaching a stage where the heavyweights can come back again. And probably Nifty's outperformance could again begin compared to an equal weighted Nifty index. So I think keep these data points in mind, and it is showing that markets divergence has started off, which was there for last 3 years in the broader market space, is moving to Nifty, and within Nifty, heavyweights, which was not the case for last 3 years almost.
That's interestingly put, all these stats that you've put out, especially the one on the equal weighted Nifty as against the free float weighted Nifty that we currently operate on. But are dealing rooms echoing the same sentiment, Dinesh?
Yes, so to a larger extent, it looks like the focus seems to be back on the large cap names, and that's showing up in the FII flows as well. But if you ask me, the big trend this week, which has been the trend for the last couple of weeks as well, is the promoter and PE selling. Even this week, saw big names coming in, and there were large blocks as well. Just run through. Zomato was a large block and sold another 2%. Samvardhana was another large block. Sumitomo sold 4.5% stake. But what came out of the syllabus was M&M today. Nobody was indicating that there will be a large block in M&M. And even there, the promoter entity came out and sold 2% stake. So that came as a bit of a surprise. Aavas Finance was another large block. 13% private equity sold. And what I understand is this is not going to end very soon. So the trend looks like it's going to continue for the next few weeks until we see the cool off for the earnings. So that's the overall feedback. While these are blocks, there are also some 25 companies where the QIPs are lined up. So the supply of paper is going to be quite strong until April. That's the overall feedback from the dealing room. So that's something to track. I guess the other big thing was the regulatory action. We saw what happened to the NBFCs on the back of the RBI action. But not only the RBI action, overall, if you see, there is a bit of regulatory overhang now. What we saw in the city gas companies, there was a SEBI order as well. There is ED probe is going on in some market participants. So maybe that can be a big headwind for the market in the near term. The regulatory challenges across various sectors. So that is something was a key takeaway for me. But Pankaj, if I want to ask you, you've been in the market for more than 20, 25 years. You've seen these regulatory actions in many other companies as well. Generally, how do you approach as a fund manager in a particular sector or in a particular company where there is a regulatory action?
So I think at times these have provided great opportunities to buy into. If the business is strong, the management teams are strong, I think these actions which leads to derating of a sector provides opportunity, and it actually differentiates between a wheat and a chaff. When the bull market is on, that everybody is a hero. सबको लगता है कि मैं पैसा, every company is good. Yeah. But when certain regulatory actions happens, you know how the processes are, whether the management team is good enough or not in a real sense. So I think regulators in India are very, very strong, and we really applaud both SEBI and RBI that they are coming with such norms on KYC, auditing so closely. And I think it's in the interest of either the consumer or the investor, which is happening today. So full marks to them. And I think during this derating process, there could be an opportunity to buy into some stronger companies. That's been my experience over the last 2 decades, that generally it never is just perpetual derating.
Yeah. Pankaj, I have 2 questions. Yes. One is, just to pick up on the first point, which is broader markets. You said breadth is deteriorating, etc. Without getting very exact, are you expecting more downside broadly in the broader market? That is one. And second, you are waiting SEBI approval for your regulatory approval for your fund, and you will raise money, etc. But imagine that you were taking in money and you were sitting on some serious money. Where would you deploy? It's a 2-part question.
Great. So let me first take the first part. So there are certain indicators which are pointing that the excesses, I won't say euphoria, but the excesses still have not got cleared in the broader market space. Let's look at 3 data points. The first is the earnings yield and bond yield on a trailing basis. It's the worst level since 2005 for the broader market space. Normally, whenever it has happened, the next 6 to 12 months, you have seen correction happening in the broader market space. Today, it's about 2.8 or 3% negative on the earnings minus bond yield. The second is the market cap distribution, which I've been talking about. Now, mid and small cap constitutes 35% of the market cap distribution. 65% is large cap. But when I look at the PAT distribution or the earnings distribution, it's 74-26. So clearly, there has been a significant re-rating which has happened in the broader market space. And the third point, if you look at, the flows, both from FI and domestic, has moved into the space. I was looking at the data. In the last calendar year, 60% of the flows in the mutual funds were in these 2 categories, right? And also, the FI holding in mid and small caps are at the highest level. So it's been more of a demand supply rather than actually fundamental thing. And last but not the least, this was the first quarter after many, many quarters that you saw the earnings breadth and the positive earnings surprise was the lowest. And from here on, I think margin levers, which was the main reason for earnings growth for the last 3 quarters, is coming down. Top line is any which way sluggish, 4 to 5% growth of the NSE 500 companies. If margin lever stagnates, then earnings growth could be a challenge. We have seen for the last 8-12 quarters earnings upgrade cycle being played, but is there a risk going forward that there could be a downside risk which could play out?
So the second question is moved then.
So, so now the second question. So I think we are still some time away before we officially go and launch. We are awaiting SEBI approvals and stuff like that. But I believe that over the next few months, if market given an opportunity, it will be a great time because structurally speaking, India is going through a massive transformation. And the companies below the top 100 will provide you that opportunity. Even as we speak today, in the mid and small cap, the entire cohort may not be expensive. There are certain cohorts which are expensive, which you have to avoid. There are certain cohorts which are low free float, where you have question mark on operating cash flow balance sheet. Those need to be avoided, and those have run up significantly ahead of market. But there are certain cohorts which have not participated in this entire rally, and they're very quality oriented. So I think markets will give you that opportunity, I believe, over the next 3-4 months. And I think the way I am thinking is that you have to be agile and flexible in your approach. If you think that in the next 6 to 12 months, large caps will do well, you should have a leeway in your fund to do that, a portion of that. And a portion should be the broader market strategy from a medium to long-term perspective.
All right. You know the way Pankaj speaks reminds me of a very good story where his approach towards regulatory action and the small caps, the mid-cap space, etc. There were a bunch of people who were asked, what is it that the presence of brakes does in your car? Most of them said they slow our car down. There was only 1 or 2 people who said they actually allow us to go faster because it gives us the ability to perhaps push the brakes when we need to.
Thank you.
Gurun, you are the few people who actually is viewing regulatory action as an enabler of growth. But speaking about growth and a lot of stocks which are rallying, Tata Chemicals stands out as the stock of the week, a near 40% gain in just the last 4 trading sessions. Prashant, what's happening out here?
It's not soda ash, Mangalam.
It's not soda ash.
It's not the underlying business, basically. So let me just go across to the wall and sort of try and shed some light on why Tata Chemicals is up 40% and why other Tata Group companies, by the way, also rallied very, very sharply, especially today, Thursday, right? So big rally, and this seems to be the reason. There was a report from Spark Capital, which I think lit the fire under Tata Chemicals in the sense that it triggered the rally. The news is old, right? RBI classified Tata Sons as an upper layer NBFC back in September of 2022. And, because of that, from the date of notification, Tata Sons and a bunch of other entities which were listed as upper layer NBFCs have got to list within 3 years, right? So, in a way, that report from Spark Capital reminded the market that that event is about a year and a half away, 18 months out. They've got to get this done by September of 2025. So that is essentially the reason why sort of markets started to look at this more closely. Now, let me just tell you, what is Tata Sons' valuation, right? I mean, look at this. This is what Tata Sons owns in group companies. And I've not sort of looked at individual rupees crore valuation, but this is the total, right? Total works out to about 6.36 lakh crore. This is from the Spark Capital report. There are unlisted entities. They've also taken, some value as optionality because there are lots of these new businesses which the Tata Group is getting into, which is semiconductors, etc. Difficult to value right now. So they put a number for that, and they say that the total value could be just under 8 lakh crores as far as Tata Sons is concerned. The other sort of way to look at this, of course, and this is, I think, the real deal, is how much do group companies own in Tata Sons, right? Now look at this. This is Tata Motors, Tata Chemicals, Tata Power, and Indian Hotels. As you can see, this data is as of March of 2023. Now the next plate will tell you what is each of these companies they're holding in Tata Sons as a percentage of their individual respective market capitalization. And here, the disproportionate candidate is Tata Chemicals. And this is, by the way, this number would have been higher. That report from Spark was basically dated, I think, the 4th of March, Tata Chemicals, of course, has rallied quite a bit. The number was almost 80% of Tata Chemicals market cap was accounted for its holding in Tata Sons. It's dropped to about 71%. I mean, the market cap I've used this as of this morning, so maybe it'll change a little bit, but not by much. In the case of others, of course, it is lower. Tata Power is 12, Tata Motors is 6, and Indian Hotels is 9% or so. I'll just leave you with, since the excitement is around Tata Chemicals, I'll just leave you with how the markets are thinking about this. This is it. So the market cap today, this morning, was about 34,000 crores. When the Spark Capital report came out, it was about 24,000 crores, right? So it's re-rated. Tata Sons stake is worth 23,400 crores. Apply. This is again the discount, etc. I've updated the figures as of today, but the idea is from the Spark Capital report. Discount is 30%. Value post discount is 16,380. Intrinsic value, which is 34 minus 16,380, is 17,620. This is the intrinsic value of the business X they're holding in Tata Sons. You take an estimated PAT in FY25 of 1,000 odd crores, according to Bloomberg. You're looking at valuations of about 17.7. Now, we can argue if 17.7 for the intrinsic business, the soda ash and other chemical businesses, is expensive or not. But as of the 4th of March, when they came out with this report, that number was not 17.5, 17.7. It was about 11 times, right? So that is essentially what triggered this move, this big move in the Tata Chemicals stock. But of course, now it's moved up quite a bit, 40% in the last 6 days, and valuations are looking up as well. But Pankaj, your thoughts on this one, and are there any ways to play this if this were to happen? It's going to be a big one, the Tata Sons listing.
What we'll actually do is we'll ask Pankaj to hold on to his thoughts. We'll not only speak about Tata Chemicals, but the entire Tata group. It turned out to be a Tata Thursday when it came to trade. So we take a short break, come back, speak about a lot more on the other side.